Hello, Sean Maloney, Digital Business Masters, another weekly look at all things strategy inside the world of digital assets. You're very welcome, especially you guys on YouTube. Remember, hit the bell, hit the like. Make sure you don't miss these episodes as we go through the year. Very important information, in fact, the most valuable information in the world, especially if you understand what's going on at the highest levels of geopolitics and macroeconomics. All right, and all we do is use that tailwind to make sure we stay the course. Lots of people will get knocked off. Lots of people will fall off the ship. Lots of people will fall off the wagon. Yeah, that's just the way it is. We've been here before, 2015, 2018, 2022, 2024. It's no different now. Okay, it's just the same. It's all about making sure you understand the big picture, and that's best served by having the information and education. In part two, of course, because of the challenges involved with being as close to the center of the money supply as you possibly can be as an individual, we obviously look at all sorts of other ways in which we can create incomes through the digital economy. Yeah, and that's part two. So if you want to get into part two, where we go into much more detail about the actual factory details of how we operate in this industry, then the link's below and we'll see you there. I'm not here to give you any advice. Whatever you've decided to do, whatever you've determined is your business. Okay. Hopefully you're doing your daily activities in this business from a point of education. Hopefully you're working with people who have been through many, many years of what it takes to survive in this industry. And hopefully you've got the fortitude and resilience to carry on. Yeah. If you've not, then this call isn't for you. We combine three basic areas now of balance. It is a balance, right? Obviously, we're hunting equity all the time. There's no better asset to do that with over the long term than Bitcoin. Precious metals have also shown us the light over many decades, but it's much, much, much slower. Yeah. But in the end of the day, it's all about preserving purchasing power. And if you understand the toga and the suit, then you'll understand what I'm talking about. If you don't understand that, then we'd encourage you to go into the first parts of the Wealth Builder series in the Academy and learn the difference between currency and money. But that's not good enough for us. Obviously, you can't run a business just off a balance sheet. So what we attempt to do is combine other income streams, one of which is variable, right? Because especially in the DeFi space, it's very, very new. It's barely 6-7 years old. So the whole idea of these transitions and being able to tokenize and being able to work on blockchain rails, which have traditionally been the preserve of brokerages or financial advisors or institutions, that transitioning into a much more liquid, open market, lower barrier to entry, is very much what we've been doing over the past 7 years. Okay, so we're into that mode very, very deeply, and we've got lots and lots of projects we'll talk about in part two that we're well entrenched into, and all we do is manage into liquidity events. On the extreme left-hand side is fixed incomes in the online space. We've done this forever. We've been around in this space since e-commerce back in the mid-noughties. Yeah, we went all the way through from there into online marketing, all the different things you can do in this space, huge amounts of time spent with, freelance, and there's so many things you can do. But what's been quite a revelation over this past period of time has been our ability to combine AI with our fixed incomes. Okay, we'll talk about that again in part two as well. So you combine those two income streams and multiple projects within those income streams to get yourself on the front foot, maintain momentum, and get yourself into a position of income. And then obviously you can add that to wealth. So that's why we have the structure we have in the Academy, from mindset to wealth. Okay, mindset, skills, systems, income, wealth. You can't just jump straight to income. You've got to go through mindset, skills, and systems first. That's the reason we are structured the way we are in the Academy. Look at it like a gym. Yeah. If you don't go to the gym, if you don't use the equipment properly, you're not going to get what you need out of it. Obviously. Same here. You've got to understand how it works and keep going long enough to get the results. So another way of looking at what we do is to combine that into then actual blockchain activities. So Bitcoin should speak for itself. We also work with USDTC stablecoins on smart contracts, huge amounts going on there, including equity shares in sizable companies in the world. And we also hunt down as much as we possibly can projects and companies that allow us to combine what's called stock to flow between equity and yield in the same ecosystem. So we're constantly looking for these things, and we've been doing it now for over a decade. And it's a case of making sure that we complete the job and then move on to the next as the technology evolves. One day people will understand this. We are very much pioneering it. That's a lot to take in for the average person. We fully understand that. So we've taken our decade plus of experience and many, many decades, if you combine the entire coaching team within DBM, covering Australia all the way across to Europe and the rest of the world, then we've got many, many, many years of experience, okay? So it doesn't make us right, it doesn't make us the oracle, doesn't make us perfect. What it means is we've got huge amounts of experience that we can condense into a neat roadmap. And that's basically what the Wealth Builder series is. Okay, so this is again using AI, which allows cost of entry to be very low, $25 a month. You can access this and you can go through the steps. We just happen to be halfway through it right now as we enter February 2026 in real terms. That's module 6 of 12. And module 6 is all about being your own bank. But we've already been through modules 1 to 5, which are all about mindset, skills, all the things that are an absolute must if you're going to survive times like we're in now, for example, where a lot of people, a lot of the plebs, a lot of people have only just started, won't last 5 minutes in environments like this. But those of us who have been through 2014, 2017, 2008, 2020, 2022, this is just water off a duck's back. Right? And that's the difference. In fact, we see this as a massive privilege. This is a huge opportunity. This is almost like a go again for many of us. And you'll understand that if you do module 6 with regards to being your own bank and being responsible for your own future. So get stuck into the Wealth Builder series, the link's below. This is my favorite slide. I bring this up, okay, even more relevant today than ever, okay, because it's time to hold your nerve. Lots and lots of talking heads, lots and lots of armchair experts, lots and lots of people all over the world, all with opinions. Nothing changes. Exactly the same back here when Bitcoin was 15 grand, 2017. Exactly the same back here when it fell down after COVID. Exactly the same back here when it fell down, after that peak in 2022. Nothing changes, okay? We've got a little bit of a job. We're somewhere around here, right? You've got to keep this in perspective without being destined to fortune, without being completely biased because this is your preferred means of a future. Look at it in the round, okay? Zoom out, and look at this as a massive opportunity. Wherever this latest pullback is coming from, as long as you're in control of your assets, as long as you're in control, if you're using leverage, make sure you're in control, okay? And do what you need to do to maintain your asset base. Don't get wiped out, whatever you do. But look at this now as a huge opportunity. If you have been working all the time, which you should be, to dollar cost average through, to have enough, liquidity in your life to be able to keep working through, to buy up Bitcoin at sub 80 is a massive opportunity, right? And hopefully it goes lower. There's talk of it going back down to its 200 moving average, 55, 60 grand, whatever. Again, a huge opportunity. So every muscle should be flexed towards doing whatever you need to do to scoop up what you need to scoop up, okay? But also being diligent and understanding what it's all about. If you decide to sell out at this stage, or if you get wiped out at this stage, you're going to have to buy back in at some point. All right, so just be very, very careful, but just make sure you keep an eye on the very, very big picture going on here. Our targets haven't changed. Nothing's changed. Everything moves as it moves. You've just got to be able to withstand this. Yeah, bang, 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 yeah? Bang. There's nothing new here. In fact, if we zoomed into these slides and went into these, 2017, 18, 19, you'd see these big drop, bang, 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 right? This one's no different. No different whatsoever. You've just got to make sure you understand how to manage it, especially if you're deciding to use leverage. So how do we stay confident like that? How do we do it? Well, first of all, we've been at it a long time, well over a decade. We understand, obviously, it's easier if your average purchase price is, much lower because you've been at it longer. If your average purchase price is getting higher, and I understand people who fly in. That's the unfortunate thing about what people do. People will fly in and did fly in at 126,000 Bitcoin. And it may be their first experience. Stuff that we were seeing back in 2017 when we were flying in at 15,000, it dropped to 2. Yeah, exactly. We understand the feeling. Totally understand the feeling. Been there, done that, got the t-shirt. But it all becomes perspective. It all becomes time, your friend, and all the rest of it. Average dollar cost accumulation. Okay, hopefully most of the DBM community have a long enough gestation now to have a decent average. And it's a case of making sure that you just be sensible in your asset management, which is basically what we talk about a lot here on in now in the Wealth Builder series as we get more towards the wealth management side of stuff. In the meantime, a big part of this is understanding what's going on as best as we can. It's incredibly confusing right now, right? It's got to be said. It's almost like, 5, 6, 7 years ago, while it was confusing in many ways because we were learning, right? And we'd never experienced what it is to be our own bank. We've never experienced what it is to be self-sovereign and be responsible and not be completely wrapped up in bosses, banks and governments. Yes, that was a form of confusion then, but we're through that now, and we've learned, what it means. All the things I've just said: take responsibility, be responsible, have the resilience, the diamond hands. That's now inside of us as a community. But this now, since 2025 and into this year's been off with a real bang, is confusing for reasons that are very different, because this is all about big macro stuff that is not only new to us in terms of how all these activities on this screen are being managed every single day, and this is the speed of it and the pace of it. And I understand why people would walk out of the gym if the pace gets too much for them, right? It's no different here. Your average person isn't going to put up with this, right? Because of their own insecurities and lack of confidence and lack of resilience, right? What they're going to do is go back to the job, back to the institution, back to the financial advisor. Well, that's death by 1,000 cuts. So it might feel okay today. I'll just live for another weekend. I'll live for another 2-week holiday a year. I'll live for another Christmas, right? People spend 50 years doing that. The true mindset is, whatever your age you are, no, I've had enough. I'm going to do something about it. And therefore, just like going to the gym, you've got to decide for yourself that you are going to make the change. Does the average person want to do that? Of course they don't. Of course they don't. Especially in your friends and family groups, because they don't want a light shine on them to show up their insecurities as and when you make changes. And that's just the way it is. That's why mindset's so important, right? And we work a lot on mindset and skills in the Academy for that reason. To say all that to say this, these points, when it comes to macro and geopolitics, are big areas. They're getting increasingly challenging to understand, right? And that isn't necessarily because we don't understand it. We do understand the principles of sound money. It's as we observe and experience the bosses, banks and governments understanding it. And to top all that off, you've got brinkmanship, right? You've got lots of things at play as the fiat system, now the longest fiat system to ever have existed in mankind's history. And if you understand that there's been over 1,500 fiat systems that have failed in the whole of mankind's history, to say that this fiat system is the longest it's ever been able to exist is profound. But it's coming to the end of its purpose. It's coming to the end of its use. The American hegemony, in that sense, since the Fed was incarnated just before the First World War, and a big reason for the First World War, is now coming to the end of its life. And it's being replaced. All right, that's all that's happening. Now, it doesn't make any difference if you own sound money. That has been the case with gold. And just in the last 15 years, we've also been able to overlay that same sentiment and activity onto digital assets. And it's incredibly early. So most people obviously have no clue about that, but this isn't about having a clue this year, next year, or even in the next 5 years. This is having resilience in your understanding of the inevitable nature that everything's moving onto digital rails, mainly because of data centers, AI, and just the way the world will operate in the future. It's just inevitable. Even if you just look at the efficiencies, even if you just look at the operation, it's inevitable where the world's going. And Bitcoin is obviously the grandfather of all that and the main beneficiary. So US dollar, having its biggest drop. That's a good example of it. If you check the Dixie and you understand what's going on. Now, they're not going to let the US dollar collapse. Of course they're not. Certainly not in the next few years. So all this stuff about, the Bitcoin maxes and you don't want the dollar to be destroyed. It'll cause too much pain around the world. It just needs to be a managed demolition, right? But you're looking at what's going on. China now stepping in and saying that they want to become the reserve currency. This is all games, right? It's noise. It's noise around the place. You've got to stay above it and just keep doing what you're doing in terms of building up your own war chest and your own self-sovereign position in sound money. 14 trillion BlackRock files for new iShares in Bitcoin Premium Income ETFs, or another ETF product. This product will be combined Bitcoin price tracking with yield generation actively managed with option strategies. Now, again, look, inevitably, the vast majority of ordinary people are not going to exit the fiat system. They're not going to exit the existing financial system. Some people call it the financial industrial complex. The baby boomers in particular, my generation, our generation, Gen X's, and even a big chunk of the millennials, they're just not going to move out of the fiat system as we know it, right? The financial system as we know it. They're just going to stay with BlackRock. Now, the fact is that BlackRock is just a big energy field, right? And it's absorbing as much of what it needs in the world, whether it be Bitcoin, property, land, oil, anything. They'll just gravitate it towards them. That's exactly what's happening with these IBIT shares, right? There's nothing new there. It's all part of the process, which speaks to the confusion side of it, because this is not something that we either understood would be happening, certainly not as quickly as we observe, where we were in 2020, where we were in 2015, now we're in 2025, 26. Did we expect this headline to be spoken about on a DBM strategy call? No. But now that we are here and it is happening, it's clear. The lines of engagement are being clearly defined, and you've got to decide. And it's okay. It's not a right or wrong. You decide whether you want to keep yourself, embroiled within the system in that sense, and working with these big financial institutions in the same way you would have been in a normal fiat-based stock, or you decide that you're going to become self-sovereign and put everything into self-custody. That's basically what's going on right now. Right? Either way, it doesn't matter. Once the governments and the bosses and the banks have had their fill, once they've decided that they've got some level of control, which is inevitable, then you'll find the thing moves into some level of, let's say, normalization, just like trading a normal stock, right? The goal, obviously, is to make sure you're ahead of that, which is what we're currently in the middle of, to make sure you take advantage of these drops so that you can push on to an even more aggressive position from a lower cost base as we go into the future. That's just what's happening, right? Crypto payments are going mainstream. This is a big part of it as well. Velocity of money. Yeah, 4 in 10 merchants already accepting crypto. It's about 75% say sales increased through crypto transactions in the past year. PayPal survey shows large companies are driving adoption. 50% of those large companies earning over $500 million in revenue already accept crypto. Okay, so you've got this velocity of money going on. You've got people actually using crypto now as a mainstay in how they live their lives, and that's nothing new to us. In fact, you'll learn all about that actually in Module 6 of the DBM Wealth Builder series. We talk about how the next generation of credit cards coming through, as they seem to be stamping down on the traditional fiat credit cards, you're finding much more nimbleness coming from the digital asset-based credit cards. And we're already on top of that. We've been spending, through what we call crypto cards for years. The whole idea is to try and do that through, leverage and equity, not sell your asset. But that's part of the responsibility of being self-sovereign. That's the skill set. That's how you learn. That's what you're doing when you're managing income, especially when you're managing wealth. Talk about that much more later in the DBM Wealth Builder series, this next few modules. Morgan Stanley officially hires head of digital asset strategy. Okay, so again, it's just more examples of this becoming mainstream and mainstay and just a fixture. And it is what it is, right? There's no way you can fight this. The institutions are going to do what they do. The governments are going to do what they do. We've just got to make sure we take our little piece of that, a bit like buying, a little piece of land in New York back in the 1800s. It's going to be that type of thing, but you're not waiting 200 years for that to materialize, because in this sector, things are much more exponential. You're literally waiting, a few years. Arthur Hayes says Bitcoin will pump if the Fed intervenes in the yen. Something we're watching very closely, of course, with the new government in there. They've been the backwater of the economy in Japan for many, many decades. The Japanese government bonds markets through the balance sheet expansion. We did a podcast on this just this weekend, so jump over to the DBM podcast if you want to learn more about Arthur Hayes' opinion on that. And it's just another tailwind. It's just another inevitability with regards to where people are going to go into risk assets. And that's what we're seeing right now in gold, silver. And next step will be Bitcoin, right? That's the thing. That's where the confidence comes from. Bybit to offer banking services, which now is coming through pretty quickly. Bybit, huge organization. In fact, Bybit was mentioning over the weekend that they believe this level of 77, which where we are now, is about the level that people are reaccepting the value of Bitcoin, and that will set a floor. But is that the case, or is it going to go down to its 200-week moving average, which is more like 55, 60? Don't know. It doesn't really matter as long as you keep managing your leverage. The whole idea is to make sure you understand that these big institutions are laying out their pathway. They're laying out their lawn, in terms of what they regard as true value in price, and then they'll take it from there. Okay, so their My Bank solution is letting users hold USDT and other fiat with IBANs for the transfers across 18 different currencies to roll out in partnership with banks expected to go live this month. Just pending approval now for that to be confirmed. Now, that hand in glove with what we'll talk about in a minute with regards to the Clarity Act, which is happening today in terms of next discussions, will be very much, Bybit with their My Bank solution will very much seen as a pioneer in that step, okay? And they're going to have to compromise, in my opinion, but it doesn't really matter because momentum is momentum. Binance announces it will convert its SAFU, that's its basically a security fund for its clients. They're going to take that up to 1 billion stablecoin reserves into BTC over the next 30 days, started today. So that first tranche went across today, which is why we saw a little bit of a spike in Bitcoin, with plans to replenish to 1 billion if Bitcoin drops below 80K, which it did. So they're now confirmed and done that. That was we did confirm that. We sense checked that. We what do they call it? We proof checked that just a few hours ago, actually. So Binance have done that first tranche, and they're going to take it up to 1 billion in Bitcoin this month. Yeah, as for that matter are the Tron network. So they're hedging on being able to buy Bitcoin on fire sale, and what we do is we simply, slipstream them, frankly, as we have done many, many years. Coinbase CEO Brian Armstrong announces Coinbase is the Trump. He wants to be part of this Trump fund investment thing for the kids. Yeah, they get the vote winning. Dell Computers set up this thing. I mean, it's fair enough. If it's helping people, if it's getting kids into position much earlier in life, no matter what their social background, into financial industry, asset ownership, then fantastic. We've said that for many years. You'd be doing it with your kids and grandkids. Get them into asset ownership. You can't save your way out of the fiat system. You've got to own assets. So what the guys are doing down there, from Michael Dell, etc. Trump's obviously jumped all over it with his ego. But at the end of the day, the whole thing is poised and set up now. And interestingly, Brian Armstrong has said, we'll get involved, but we want people saving in Bitcoin. So that's an even deeper level of sophistication based on everything you guys should already know with how Bitcoin by far and away outstrips any stock and will continue to do so for the rest of our lives. Geopolitics, all hand in glove with macro. All right, so there's a lot of crossover there. You already heard me refer to one or two of these points in the macro. Very, very important. Huge amounts of things going on geopolitics. This, I know, gets very confusing and hard to keep up with and everything else, but fortunately we're able to do this full time. So we do keep an eye on things very, very closely, and I do my best to summarize every single Monday on these calls. The US crypto market structure bill has cleared another hurdle. They just went through that process. This is the market structure bill now, not to confuse with the Clarity Act. So there's two things going on at the same time. So they've agreed to withdraw credit cards, swipe fees, etc. From the bill. Okay, so this just makes market penetration easier, basically. So that's well down the road. The market structure bill is well down the road. We've got all eyes now on the next bill. In the meantime, these are a bit out of order. In fact, what I'll do, I'll jump down to the Senate AG bill because that's more keeping it in line. I'll come back to these laggards in a minute. But in terms of the Senate committee, last Thursday, it passed its proportion of the Clarity Act. Okay, we had the agricultural sector there just needing to do their bit. They did. It won 12-11, so it's going through now to the next step. Interestingly, absolutely no Democrats whatsoever voted that through. You've got to watch those guys, right? Considering they call themselves socialists, they do a very good job of keeping their hands in the cookie jar with lobbyists, right? Why people can't see that, I have no clue. But mainly it's because I think they have Trump derangement syndrome. But at the end of the day, this is moving now to Senate, and it's going to be an interesting case of where and how quickly that can happen. Right now, or the next few hours, as I'm recording this video, they are sitting down with the top industry leaders around the Clarity Act. And if you've watched what we've been talking about in the podcast over the past few weeks and the blogs and everything else, a lot of it is hinging on this ability for, let's say, USDT-based online blockchain companies being able to issue some level of interest yield to their clients directly from treasuries. Right? What the normal fiat banks do is they take your savings, put them onto treasuries in some way, shape, or form. They take their 4 to 5% yield and give you back 0.01% if you're lucky. So what it has done is highlight that. Right? Why there's not more people across mainstream media shouting and bawling about that tells you everything you need to know about mainstream media. But at the end of the day, that's happening this week. Right? When it goes through Senate is another question. When it gets through Senate is another question. But Trump's already agreed to sign it off. So it's only a process now. And obviously it's going to start to create much more interest in what's going on around the place. Okay. Staying in America for the time being. Kevin Walsh now is the nominee, but we will get through, I think it's May, to become the new Fed chair. You know, he's a hawkish guy, but at the end of the day, he's an absolute Bitcoin advocate. If you just AI group Gawk or, you know, go through whatever you're using for AI and just ask all the Bitcoin comments that Kevin Walsh has made over the past decade, you'll see what we're talking about. So he's on our side. That means the Fed's on our side. That means the Senate at this stage, at least until 2029, is on our side. The banking systems are coming towards what we're talking about as well. Whether they're doing that because they want to or not is a different question. But at the end of the day, it's all tailwinds that we move into and we take advantage as much as we possibly can. Okay, so that's the US side. Mentioned everything I think I need to mention there. More positive, France considers a bill to acquire 2% of Bitcoin's total supply to create its own strategic Bitcoin reserve. Fair play to France. Okay, they need to get rid of that 2-bit president, bring someone in who knows what they're doing, and get moving with that as an independent state. Forget Europe. Okay, it's taking too long. They're never going to catch up. They're going to get eaten alive if they don't get moving compared to what the US, China, etc., and Russia are doing. Speaking of which, the UK, the old granddad of Europe yet again, symptoms again of just the lethargic, backward nature. You know, look, the City of London's one thing, right? That will do what it does to be as it's done for hundreds of years, to be self-serving. But around the UK, you've got to separate the City of London from the rest of the UK. Around the UK, you're getting all these sentiments coming out, such as the UK banks are currently blocking about 40% of crypto payments going through from ordinary people in and out of the system. Like $1 billion, or £1 million, sorry, in transactions rejected. An industry survey of exchanges shows UK banks are blocking around 40% of crypto payments, with 80% of platforms reporting sharp rise in customer payments disruptions over the past year. Now, we've known about that forever. So we've always said, whether it's been the UK, it used to be a lot in the US as well, but that's obviously shifted quickly. The UK, again, lethargic, lazy, backward, is now one of the main places we point at. And that's why you've got to have at least 5 on and off ramps. It's just the way it's always been. And stay under the radar, keep your transactions at relatively low levels, under $2,000, and you'll be fine. So we've learned how to play that game for years, right? But it's just showing we're just going to go somewhere else, right? We'll just start to use other means. We're just going to get away from the banks altogether. And so they won't let it happen. They'll catch up, but it's just a painful experience of watching these very slow decisions that come through the UK system at the moment. And similarly, UK banning Coinbase ads for irresponsible messaging. The UK's ASA, the advertising committee there, banned multiple ads. We saw them late last year, actually, the Coinbase ads. They were quite funny and very true. ruling they trivialize the risk of crypto and misleadingly implying digital assets could ease the cost of living. I mean, enough said, right? Enough said. So this is what you're dealing with some of this inter-country stuff. And Europe itself, as a bureaucratic body, is the worst of all, because they are so wrapped up and tied up in stuff that is now a decade old that they can't even get out of that, let alone keep up with what's happening now in the rest of the world, especially when it comes to digital assets. All right. On that point, regulated on-chain dollar settlements now available through Abu Dhabi's universal digital currency there, USDU, the first US dollar stablecoin registered by the UAE Central Bank. It's now the only USD token approved for regulated crypto settlements in the UAE. Now, the UAE, we spoke about this before, huge amounts of capital has already moved over to that part of the world. Okay, in terms of the way people want to live. Now, that'll have a shelf life. Yeah, eventually they will. Somewhere else will appear. But right now, it's that part of the world. And these guys are really cutting edge when it comes to what's happening with digital assets, etc. So fair play to them. I've mentioned the White House Crypto Summit set for today, 2nd of February, 2026. We'll see what comes out of that in the next few hours. And then just hot off the press, just this morning, Ripple have been granted a full EU electronic money institutional license via Luxembourg, okay, into the EU. So fair play, Ripple. Go for it, right? So some brinkmanship going on there with Ripple. If you're part of the Ripple army, fair play. If you're not, as we're not, we just tend to have a much higher level there rather than get drawn in. We've been involved with stuff like that before. So we're a bit more circumspect. But the whole idea is that, yes, absolutely, we do have Ripple on our balance sheet, and would encourage other people to do so too. That's a big step in terms of where Ripple are headed. Fair play to them. Last but not least, the structure we have at DBM, because there's a huge amount of information to take on board there. I'll do my best to distill it and get it across as succinctly as I can every single session, every week in this particular call. But, in reality, you're going to have to be part of the process. You're going to have your own digital blockchain factory. You're going to have to understand which machines you're managing. You're going to have to make decisions on what you want to be doing next. And a lot of times, you're just going to need the support, right? You're just going to need the ongoing accountability. And it is a weekly thing just to stay the course, because you'll be running this business, or at least attempting to set this up as a business, at the same time as your normal life. And that's okay. That's okay. But all the coaches around the world that we've got have all been through that process and are still going through that process. So we all work together to try and make sure we get to where we want to go. And this isn't something you'll do in a year or 2 years or even 5 years. This is something you build ongoingly, right? And keep moving, especially if you start to dip into variable income and leverage. You've got to understand what it is you have to do at certain points as you work across the process. All right? So you're more than welcome to join us there. Hopefully that was useful. We'll see you on the next video.